Welcome to The Explainer. I am so thrilled you're here. So today we're tackling a topic that, let's be honest, usually makes people's eyes glaze right over: business finance. But don't worry, we're going to translate all those complex numbers into incredibly simple, everyday language. We're breaking this down into a clear guide you can actually use to understand how a business really operates. So get comfortable and let's dive right in. Okay, picture this. Have you ever felt this exact frustration? You're hustling, you're out there making sales, your products are literally flying off the shelves, or maybe your services are booked completely solid. But then the end of the month rolls around, you check the bank account, and there's nothing there. It's completely empty. You're left scratching your head, wondering where on earth all that hard-earned money actually went. It's a classic problem, and it causes sleepless nights for countless entrepreneurs. But you know what? You're definitely not alone. Today, we're going to solve that exact mystery by getting to the root of how business finance actually flows. Here's our quick game plan for today's explainer. We'll start with the language of business, hit the 3 key financial statements, break down revenue versus profit, uncover why profit is not cash, look at cash versus accrual accounting, and finally, wrap up with exactly why accounting matters. All right, section 1, the language of business. Let's start with this foundational concept. You know, accounting gets a pretty bad rap, but what's really interesting is how we can completely reframe the way we think about it. It is not just a bunch of boring math, and it certainly isn't just a chore you suffer through at tax time. It is literally the financial language of your business. It's the core tool that tells you exactly how much income rolled in, what expenses went out, your true profit, and the actual, undeniable health of your operation. Without understanding these numbers, you aren't really running a business. You're kind of just making decisions based on pure guesswork. And guessing? Yeah, that's way too risky. You need the data to guide your intuition. Moving on to section 2. 3 key financial statements. These are the absolute building blocks. Okay, before we get deep into the weeds, let's look at the whole shebang. You have 3 main reports that work together to tell the full story of your company. First up, the income statement, which handles your sales and expenses over time. Then, the balance sheet, giving you a static snapshot of your current financial picture. And finally, the cash flow statement, which tracks the actual movement of money in and out of the bank. Think about it like this. If your business was a car, these 3 reports are your dashboard. Without them, you're essentially driving down the highway blindfolded, right? You'd have absolutely no idea how much fuel's in the tank. Starting with the income statement. Honestly, this one's incredibly straightforward, and it's usually the one people are most familiar with. Its entire job is to track your total sales over a specific period, like a month or a quarter, subtract your total expenses for that same period, and then reveal your remaining profit. Basically, it just tells you if your core business model is actually making money or losing it. And that brings us to the core logic behind it. Profit equals income minus expenses. I know, it's the simplest formula in the world, but it is absolutely the basic math behind business survival. If your expenses are consistently higher than your income, you don't have a profit, and eventually, well, you won't have a business. Every decision you make needs to either bump up that income number or efficiently trim down those expenses. Next up, the balance sheet. Now, if the income statement is a video showing your operations over a stretch of time, the balance sheet is a freeze frame. It reveals the underlying strength of your business frozen at an exact moment. It looks at your assets, that's what you own, like cash, inventory, and equipment. Then it looks at your liabilities, which is what you owe, like debts and unpaid bills. Subtract what you owe from what you own, and boom, you get owner's equity. That is essentially your true slice of the pie. It's the ultimate reality check for your net worth. Finally, the third report, the cash flow statement. A lot of experts will actually tell you this is the most critical report of all. Why? Because it tracks actual, tangible money. It shows exactly where your physical cash came from, exactly where it was spent, and precisely how much spendable cash you have on hand right now. You can't pay your employees or your landlord with potential sales, and you certainly can't pay them with owner's equity. You pay them with cash. If cash flow stops, the whole business stops. All right, section 3, revenue versus profit. This is a huge trap for beginners. Let's clear the air on this right now, because a lot of folks mistakenly think these 2 words mean the exact same thing. They definitely don't. Revenue is your total overall sales. It's that big, exciting, flashy number at the top of the page. But profit? Profit is the money left over only after all your expenses are deducted. An easy way to remember this? Revenue is a vanity metric. It sounds amazing at parties, but profit is your sanity metric. It's what keeps the lights on and what you actually get to keep. Let's anchor this with a real example. Imagine you bring in $100,000 in revenue. You're probably feeling pretty rich for a second there. But look at how a massive slice, say $70,000, goes straight to expenses. That's your office lease, raw materials, software, payroll, all of it. The slice that is actually yours, the profit, is only $30,000. Expenses are always going to eat up the majority of your revenue. You have to focus intensely on protecting and growing that specific profit slice, rather than just endlessly chasing a higher revenue number. Section 4. Profit is not cash. Get ready because this is a massive aha moment. Wait, how is it possible that profit isn't the same as cash? Well, think about profit on paper versus cash in the bank. You could close a massive deal today, deliver the service perfectly, and record a huge profit on your books. But clients often have 30, 60, or even 90 days to actually pay that invoice. During that waiting period, that money is not in your hands yet. So you have incredible profit on paper, but a completely empty bank account. And guess what? You still have to pay your team this Friday. This timing lag is exactly why a highly profitable business can completely go bankrupt. They just run out of actual spendable cash while waiting for the checks to arrive. Which brings us to Section 5, Cash Fees Accrual Accounting. Because the timing of money is so incredibly tricky, businesses use different rules to track it. These are your two main methods. With cash accounting, income is only officially counted when the cash literally hits your hand or your bank account. It's simple, it's intuitive, and it directly mirrors your spending power. But with accrual accounting, income is counted the exact moment a sale is made, regardless of when the client actually pays you. Fun fact, small startups usually love cash accounting because it's so simple, but larger companies almost universally use the accrual method. Why? Because accrual accounting paints a much more accurate long-term picture of their true financial obligations and overall sales pipeline. It evens out those volatile random spikes of cash deposits. Finally, Section 6, Why Accounting Matters. Let's bring all this together. So what is the real-world payoff for learning all this stuff? Mastering this financial language empowers you to make actual data-driven decisions instead of just relying on your gut. You can completely control your expenses because you finally see exactly where every single dollar is leaking out. You can actively increase those profit margins, run real checks on your overall financial health, and safely plan for future growth. By understanding this, you stop being a reactive passenger in your business and you become the proactive pilot. You are in total control. There's a quote from our source material that really hits the nail on the head. Accounting is not just a numbers game, but the best way to understand your business. I absolutely love that. When you know your numbers intimately, it's literally like turning on the lights in a pitch dark room. Suddenly, all the obstacles are visible, the pathways are clear, and everything just finally makes sense. So, I'll leave you with this final thought. Are you going to continue guessing, just crossing your fingers at the end of every single month and hoping the math works out? Or will you let your numbers confidently guide your growth? The tools are right here in front of you. Take control of your financial language. Keep a close eye on those 3 key statements and watch your business transform. Thank you so much for joining me in this explainer. Now go out there and own your numbers.